Okay, let me start the webinar. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'll be presenting the Asian session live market analysis for the new year on 4th of January between 5 and 5:30 GMT. On the onset, I wish to take this opportunity to wish you all very happy and prosperous new year and abundant profit in your trades. I wish to take this opportunity to wish you all very happy and prosperous. Okay, sorry, there's an echo. Okay, so as usual, we will try to do the analysis during this Asian session. And I'll be giving the session-wise forecast for Monday to Friday, how exactly during the different three sessions, that is Japanese, European, and US sessions, the market is expected to behave. And that will be primarily for Euro and GBP. I'll be giving the forecast for the 4 majors and 2 commodity pairs. Besides, we will also do the market reading, noting down the initial lows and the highs set around 3:30 GMT. And also I will explain to you the trading strategy we should use by giving a live trade call. So these 3 components are to be effectively used in our trades in order to maximize the profit. That is, limit the risk and maximize the profit. So we depend more on that of the trading strategy, and we follow the derived forecast in order to get the market trend, and to fine tune the forecast we use the market reading. So this is how we take all 3 components into consideration in order to make effective, consistent profit making trades. First of all, we will see the forecast for this week. Now, as I explained during that of the last year forecast, that the market is expected to make volatile moves during that of the last month of the year and the new month of the new year. So it is the first week of January. The yearly trend reversal is expected to continue till end of Jan. So the market is expected to make very volatile moves. And last week, during that of the year-end time, we would have seen that Euro was gaining the levels while GBP was losing the level. And also, Australian dollar was gaining the level and USD CAD was losing the level. That is how they alternatively made the moves on the last day. And also, you would have noticed that the last week, that market was really having thin volume, not significant moves were seen in the market, which shows very clearly that Forex trading is gradually got reduced towards the end of the year. Because the previous years, I have noticed many times, the players used to make massive moves during that of the year-end time. And those days are gone, I suppose, because you come across lesser volume from that of the participants. As a result, the players are also making subdued moves in the market. Now, coming to the current week, again the market is expected to make the volatile moves during that of the first month of the year as the yearly trend reversal time. So during this process, they will slowly gain the level and suddenly drop, and slowly gain the levels and suddenly drop. That sort of moves they are expected to make. Once they stop cutting the new low and stop going below that for more than 30 minutes to 2 hours, we can take a buy. Then they will slowly gain the level, and you have to use the trailing stop to protect the profit. And if you simply assume that they will take it to further higher levels, suddenly they may reverse and show the loss in your positions. And also, in order to handle the crosses, they make alternative moves or the contrarian moves. Gain in the case of Euro and drop in the case of GBP, or gain in the case of GBP and drop in the case of Euro, or gain in the case of Euro and gain in the case of USD, and that sort of contrarian moves they could make during the this trend reversal time. So today, on 4th of Jan, in the case of Euro and GBP, they are expected to slowly swing and firm up during that of the Japanese session, and then swing and slide during that of the European session, go closer to that of the low again, and then they are expected to firm up during that of the US session. So now if you watch carefully that in the case of USD yen, they are just dropped it and holding low, and they are just making break downward stop below that of the low, inducing that long holders to liquidate the long positions. Later on, they are expected to gain the levels in the case of USD yen. And at the time, they will also make a small drop in the case of Euro and GBP and then start gaining the levels. So during such drops, you can take buy positions closer to the low, and then they will gain again. And tomorrow, they are expected to make the swing and firm up move during that of the Japanese session, and then continue to rise during the European session, and then profit booking move during that of the US session they may make. And on 6th of January, Wednesday, midweek, they are expected to slowly gain the level all through the day. And that will be an intentional move on the upside, and that will indicate that the players intend to gain the levels in the case of the other majors. Then on 7th, they are expected to make some profit booking slide, and during that of the Japanese and the US session, and rise during that of the European session. So that may give the confusion to that of the traders that the market does not have strength. Then later on Friday, they are expected to make the swing and rise during the Japanese and the US session with a little bit of sideways move during that of the European session. So these are all the expected market moves in this week, and carefully trade using the hedge order to limit the risk. As soon as the position is taken, once the position makes profit, keep stop at entry and remove the hedge order so that when they suddenly make a drop, you don't incur any loss. And then subsequently, when they gain the level, use the trailing stop in profit making position and try to earn from that other market. Now, with regard to the levels in which the currencies are expected to swing during this particular week, and as I explained earlier occasions, that in the case of GBP, they just made a forcible drop in order to give that impression to that of the market is bearish. Normally, they use GBP to create the market sentiment. Only then the traders think that, okay, market is going to collapse, and they will liquidate the long position in euro and also build sell positions. And later on, the players absorb all such sell positions and start gaining the levels. And in the case of USD yen, in order to confuse the traders and also to drop the yen crosses, they made the drop in the case of USD yen, also in the case of euro and GBP. So this is the way they handle the yen crosses. And on last week, you would have noticed that they've been aggressive in handling the commodity crosses by gaining big in the case of euro and you're gaining big in the case of USD, Australian dollar and Canadian dollar. And then later on, they have started reversing it now. So after that of the commodity crosses and the commodity pairs, they are going to handle the yen crosses now. And for that, they are making a downward move in the case of yen crosses, along with that of euro and GBP. And later on, they are expected to gain the levels in the case of euro and GBP. At that time, USD yen is also expected to gain. Last week, I was telling you, or the previous week, I was telling you that USD CHF, they made that drop in order to gain again. And at that time, they could be making a drop in the case of USD yen. So USD CHF, they made the drop last time. At that time, USD yen was not dropping. But now they are gaining the levels in the case of USD CHF. At this time, they are making the drop in the case of another denominator currency, USD yen. So this is how they handle the denominator crosses. Similarly, last week or the previous week, they just made the big gain and the drop in the case of USD CAD. And now they are oscillating around that 1.38 to 1.39, and they are expected to come down again during this particular course of the week. Australian dollar, they are expected to slowly push it to the higher level. They have come up to that of 0.73, and this time they are expected to go to 0.74 and above. In the case of Australian dollar, dips are buy opportunities. So now we will see the market reading. So if you got any questions, you can ask me in the chat window. I'll be willing to answer to those questions during the webinar time or at the end of the webinar. I have made a note of the initial lows and the highs around 3:30 GMT, and the current time is 5:10 GMT. And let us compare the majors where exactly they are standing. Now, Euro formed the low 1.0828, and that is not been breached. The high was 1.0875. They breached the high and staying above. As expected, they are expected to slowly form up Euro and GBP during this particular session, and then during the European session, they are expected to make a slide in order to confuse the traders. Either way moves they are expected to make. In the case of GBP, the low was 1.4693, which is not being breached afterwards, and the high was 1.4746. They are not breached the high also. They are holding it closer to that, and they are expected, still it is in the negative net change, and they are expected to slowly gain it later on because they will be handling the Euro GBP cross. Euro GBP cross, they are trying to gain the levels, so that is why they are holding GBP and gaining levels in the case of Euro. Then in the case of yen, 120.02 was the initial low, 120.47 was the high. They breached the low and formed the new low, 119.47, and still holding around that of the low. And we need to watch for 2 hours to find out whether they are breaching this particular new low or not. And if they don't breach the new low, then we can take the buy positions. So they breached the initial low and staying below that. And so watch for 2 hours. It is an extended downward move, and towards the close of the Japanese session or early European session, they are expected to make a brief downward stop for a few pips and start gaining the level. Again, during that of the US session, they will make one more downward stop and then gain, because at the lower level, they will discourage people taking buy positions. So you have to keep it in mind that there is no hurry in taking the buy position, and you can wait for the market to settle and see that the new low is not breached for 2 hours or 2 sessions. Then you can take the buy position. It will make definite profit. And also in the case of yen crosses. Then in the case of CHF, 0.9993 is the low, and they just breached the low. 9976 is the new low, and 1.0028 is the new is the high, and that is not being breached. So they gained the level on Friday above that of parity and start making the slide again. They could come down another 40-50 pips and hover around and then start gaining above that of the parity during the course of the week. And in the case of Canadian dollar, 1.3817 is the low that has not been breached, and 1.3917 was the initial high. They went up to that of 1.3919, just 2 pips above and come below. So they just done a brief upward stop, and they are expected to, if they hold below that of 1.3917 for 30 minutes, then they will start making the slide again. And in the case of Australian dollar, 0.7214 was the initial low. They just made a brief downward stop into 7208 and then come above that of 7214, and 7301 is the high. They are not breached it, and they are holding above that of the initial high for more than initial low for more than 30 minutes. They are expected to slowly gain the level. And you know that initially every week they gain first the levels. In the case of Australian dollar, the commodity pairs lead the rally and lag behind. So watch that and take positions accordingly. So when they gain the levels in the case of Australian dollar, New Zealand dollar will also be expected to gain correspondingly. But there will be a time variation. As a result, you will come across Aussie New Zealand dollar will also undergo their swings. So now we will decide upon the trades, what you can do. So I'm going to keep a buy limit order in the case of Euro. $1.0854, that was the low what they are set on, what that was the closing level on Friday and 1st of January. And why I'm keeping it, because they made a 30 pips downward stop and start gaining it within 30 minutes. So which clearly indicated that they made a quick downward stop and start gaining it. And during that of the European session, they could come down to that of the low what they are set or the closing level and then start gaining the levels again. So we will keep 30 pips take profit order or the exit order. And sell stop 30 pips below that of the entry. Days of GBP, again a buy limit order around 1.47, the psychological level, and 1.4730 as an exit. 1.4670 as the hedge order. Then Australian dollar, I'll just keep 4 pips below that of the current level, a buy order. $7,220, just to get a fine-tuned fill with the take profit at 7,250 and hedge order 0.7190. Okay. Why I decide to keep 4 pips below? Because they have briefly done the downward stopping below that of the initial low and come above, stayed above that of the initial low 70 to 14 for more than 30 minutes. So they could make a small dip of 5 or maximum 10 pips. So the momentum what you come across now indicate that they may not make a big drop. So they will just make a small dip to confuse the traders and start gaining the levels. When Euro and GBP make a dip, they will try to make a small dip in the case of Aussie. You can watch and fine tune your entry at that time. Otherwise, you can keep the limit order if you wish. And keep the hedge order to limit the risk so that 30 pips risk only you will take at a given time. Once the position makes profit, keep stop at entry and remove the hedge order. Then later on, once they start gaining the level, you can move the take profit order above that of the market, maintaining about 20-30 pips, and move the trailing stop as well. That way, you will be able to maximize the profit. This is the recommended trade for 4th January. Now, these are all the session timings. So keep in mind that the market is expected to be very active in the case of majors during the early and the late sessions. Mid sessions, they handle the crosses. And also in between sessions, you come across the gap time. And these gap times, they handle the cross. So they make the false move. So coming Friday, I got some assignments, so I'll not be able to review the forecast. What I have given it, I'll come back on 11th of January and review the forecast, what I have given it today. And I'll answer the questions which are asked here now. And Grace, good day. day, happy new year, wish you all the same. Can you kindly comment on the expected movement in the case of New Zealand dollar? New Zealand dollar, as you see, you compare the net change in the case of New Zealand dollar. New Zealand dollar net change is 74 pips negative net change, and Australian dollar is 62 pips negative net change. They are moving almost in tandem with each other. So to start with, they are expected to gain equally, and then later on they will try to gain the levels in the case of New Zealand dollar to start with quickly when compared to Australian dollar, and then hold the New Zealand dollar, gain the levels in the case of Australian dollar after making a small dip. So that way they'll be able to handle Aussie New Zealand dollar cross. But Australian dollar and New Zealand dollar are expected to make swing and rise moves during this particular week. Then Fanny has got a good morning, and Sivaraman for Euro USD from buy or a sell. Okay, Euro USD, my recommendation is only buy during dips and book profit during that of the rise. So any other question? If there are any questions, I am willing to answer to those questions. I'll show the forecast slide. Okay, some more questions coming up. Do you have any recommendations for trading next payroll, non-farm payroll this week? So I'll try to find out whether I'll be available for non-farm payroll. But as a result, non-farm payroll is expected to be announced on 8th, and you know that they are expected to make a very quick upward rise after that of the non-farm payroll. So before the payroll, they are expected to make a slide, and that will be a good buy opportunity. But it may not be coming to that of the current lows. After gaining the levels, they may just oscillate in the intermediary level. Afterwards, they are expected to make further rise. And if you develop the bearish feel in the case of Euro and GBP, just because GBP is showing new lows, and you know they are capable of gaining about 250 pips in the case of GBP in no time, and then start creating the move. But either time you will be either holding any buy position, or you would have taken a wrong entry of sell positions. So avoid doing emotional trade, avoid doing technical trade, aiming for about 20-30 pips on the downside, and those downside moves are only traps. So the best thing is wait for such downside moves and take buy positions. Whenever they make a quick downward move, take a buy position and keep the hedge order to limit the risk. And in the case if it is hedged and the hedging is making profit, keep stop at entry in the hedging and book profit on the downside in the when they happen to drop quickly. And once they form the new low and not breach the new low for 30 minutes, close the hedge position with a profit and keep another hedge order. Then when they quickly gain the level, trail the hedge order until you are able to keep stop at entry in the buy position. So that way you can do either way trades. Otherwise, simply keep stop at entry in the hedge and let them go down anywhere, and then they will come up. At that time, your hedge will be closed with stop at entry, and then keep another hedge order to limit the risk. And then once they gain the level further above that of the your buy level, keep stop at entry in the buy level and remove the hedge order. By this way, doing effective trading, applying the effective trading strategy, you will be able to really earn consistently from any market condition. Increase. What about the commodities movement? Commodities are known to make the rally on the upside in the early part of this week. Then later on, Euro and GBP are expected to catch up. And so you normally come across the commodity pairs lead the rally and lag behind later on. This is how they handle the crosses of the commodity pairs. Okay, USD trend for this year. US dollar is expected to be slightly overweight till the US elections, and afterwards you'll come across US dollar is expected to weaken drastically. So till this time you'll come across the gains in the case of Euro and GBP, but the gains will not be similar to that of the earlier time gains what we have seen last year. In Dowell, GBP, which position to buy? GBP, any dip and close at 1.47 is a good buy for a position trade as well. And technically, people might say that it could go to 1.45, 1.43. That might be theoretically possible, but practically, the players will see that by doing the lower level consolidation, when the traders quickly turn sellers, they will try to absorb also sells and reverse the market. Any other question, please? So these are all the levels in which the currencies are expected to swing during this week. And as you see that they are slowly, they cut the new low. I mean, they cut the low in the case of USD 119.47 to 119.46. That indicate that they are just consolidating near the low, inducing the traders to liquidate the long position. So you wait for 2 sessions and take the buy positions in the case of USD. Not immediately. Okay, there is another question. What could be the lookout for when we buy, sell cross currencies? See, as far as the cross currencies are concerned, say for example, you want to trade Euro Yen, then see how exactly Euro is making a move with regard to the net change. So Euro net change currently is positive, 26 pips positive net change. USD Yen current net change is 71 pips negative net change. As a result, you will come across Euro Yen will be showing negative net change, because yen has become more stronger when compared to euro. So this way, when they make a regular USD weakening or their USD gaining move, that means they are only making small swings. And whenever they make a downward move in the case, negative net change in the case of euro, negative net change in the case of USD yen, that is a contrarian move to bring in the reversal. At that time, you take a buy position. Now, for example, USD GBP, I mean USD yen and GBP both are showing negative net change. So in that case, then GBP yen is making more negative net change. GBP yen is showing about 100 pips negative net change. And this is how they make the contrarian move. And once they breach the psychological level 176 and stop cutting the new low, you take a buy and keep 50 pips hedge order to limit the risk in the case of crosses. Because of lesser volume, they bring in more volatile moves. And later on, you will come across during this particular week, they make massive gain in the case of yen crosses. Okay. So no more questions. So I take this opportunity to thank FX Street for the facilities provided. and you people for your kind presence. And I'll be coming on next Monday on 11th of January and try to give the forecast for the next week and also review the market for you, what I explained it as a forecast. So wish you all happy New Year and profitable trades. See you on Friday, Monday.